I've been seeing a trend on social media where people are going online and they're advising people to liquidate and close out their 401ks. Now, I can understand that there are some people that are getting a little antsy and they're getting nervous because they're seeing their accounts start to pull back some, especially with what's going on in the world economy right now with the tariff wars kind of heating up between the US, Canada, Mexico, Europe, and China, and just the overall uncertainty that's coming out of this administration. But one of the worst things that you can do, especially when the market is pulling back, is to sell your positions. Now, I have made several videos in the past, and one of the questions that I've asked on those videos, and I'll ask it here, is I really want to understand the psyche of people when it comes to holding or selling investments. So for example, whenever there's a hot stock or there's an investment that's continuing to move to the upside, and I'll use Nvidia, for example, there's a lot of people that are willing to go out there and they'll chase those all-time highs. Now, it's probably because they have FOMO or fear of missing out. They don't want the investment to take off without them. So we'll go out and we'll invest in these positions as they move to the upside. And we're not worried about, losing money. We just want to make sure that we get in on that winning trade. But on the flip side, when the market pulls back, we're so quick to sell our positions because we don't want our money to go to zero. And one thing that I've learned over the years from investing is that's the exact opposite of what you want to do. And let me explain that. So when the market pulls back, this is the time where you have the best buying opportunities because most of those blue chip companies are on sale for a discount. So if you liked Nvidia, for example, at $140 a share, when it pulls back to $108 a share or $105 a share, you should love that price. But one thing that I can guarantee you is when the market pulls back, it will reset and rebound and move back to the upside. So those of us that were around in 2007 when the market crashed, everything was on sale. You could get cars for pretty much nothing. Houses were going for well under market value, and a lot of people lost money during that time when the market pulled back. Now, the people that stayed in their investments at that time, and more importantly, doubled and tripled down during that time when the market returned around 2010, then they were able to reap those benefits. And a lot of people got rich at that time. Now, if you follow a lot of the world's greatest investors, like Warren Buffett, for example, one of the best times to invest is when the market is in turmoil and it's pulling back. So I often say when there's blood in the streets, it's time to eat. And that's what's going on right now. So if you actually have money sitting on the sidelines or you have money sitting in an investment, don't pull your money out of that investment. Don't do that, especially if it's in a company like Apple, Meta, Nvidia, Microsoft, one of the blue chip companies, because those companies will bounce back. If you take a look at the S&P 500 and you look at the top 10 stocks in the S&P 500, I can almost guarantee you that all of those stocks will eventually rebound. Because if they don't, if any of those companies go bankrupt in the top 10 in the S&P 500, then the US economy is in huge trouble. Could you imagine a company like Apple going bankrupt, Meta going bankrupt, Microsoft going bankrupt? These companies are sitting on huge piles of cash. And a lot of them are buying back their own stock right now because the stock is cheap. They can actually buy their stock back, which ultimately drives up the value of the price at a later date, and it benefits anybody that's a shareholder. So if you do have a 401k and you're worried about the market pulling back and you're seeing those numbers go down, some people have lost $50,000, $100,000 in their 401k. If you've got 10, 15 plus years to retire, I wouldn't even worry about it, right? You're gonna just continue to fund that account at the same level that you were before the market pulled back. And I can guarantee you in a few years, when the market rebounds, you'll be happy that you did that because not only were you able to withstand that market pullback, your account's gonna actually explode because you're now averaging in at much lower cost across the board. Now, if you're closer to retirement age, I still wouldn't pull my money out of my 401k or my investments because you never really want to liquidate your account, especially when the market is down. So if you can withstand the current pullback in the market and can hold off until the market rebounds. That's what I would advise you to do. And as we get older, we want to make sure that our investments start to get a little bit more conservative every year that we get closer to our retirement age. So if you have a 401k and you've been hearing a lot of noise about people telling you to liquidate, block out that noise. And I'm going to give you a couple of tips and a couple of pointers of some things that you can do to ensure that you're setting up your account for maximum growth in the future. Now, the very first thing that you want to do is you want to get in contact with your 401k administrator. So most companies use big brokerages like Merrill Lynch, Fidelity, a company like that. You're going to reach out to them and you're going to schedule time to speak to a financial advisor. Now, a lot of these companies will give you access to a financial advisor for absolutely free. And I would advise you to take advantage of that more so now than ever. And what that financial advisor is going to do is they're going to ask you a bunch of questions to kind of understand, like, how much longer do you have until you want to retire? What are your goals for retirement? And what does your portfolio look like? And are you positioned well to actually hit your goal? And this will give you an opportunity to potentially rebalance your portfolio if your portfolio is kind of out of whack. So that's number one. The second tip is you want to try to reduce your living expenses as much as possible. So this is going to be really important because if the market continues to move to the downside, you want to make sure that you have money set aside in case an emergency pops up. You want to make sure that you're setting yourself up to where you don't have to liquidate your 401k, or you don't have to take a withdrawal from your 401k in order to keep yourself afloat. So you want to make sure that you have money set aside to handle any issues that may come up. Now, if no issues come up, then you have cash sitting on the sidelines that you can use to deploy for other investments. Now, the next tip and the other thing that I would be looking to do at this point in time is you want to try to eliminate as much consumer debt as you have as possible. If you got any credit card debt, you got car loans, you got Klarna, buy now, pay now, whatever you have, this is now an opportunity for you to prioritize paying off of that bad debt. When the market moves to the downside, there's a tremendous amount of opportunity for you to invest when the market is low. If you're able to invest in the market whenever it pulls back or build out your opportunity fund, some people call it an emergency fund. I call it an opportunity fund because I'm not saving money just to save money. I'm saving money so when an opportunity arises, I have cash to deploy to jump into an investment that will pay dividends for me in the future. See, we got to start thinking strategically here. We have to stop thinking about the here and now, and we have to start planning 5, 10, 15 years out, because that's whenever these financial decisions that we're making today will impact us, whether positively or negatively. So whenever you're sitting there and someone's saying, you know what, you're in the market, I would liquidate my account because the market is going back. Don't do that. Don't do that. You're robbing your future for a decision that you make today, and the decision that you make is wrong. You should not be pulling money out of your 401k, especially when the market pulls back, unless it's absolutely necessary. It's the very last option that you have. You're going to lose your house, you're going to lose your car, you're going to lose something, and you need the money. Then yeah, of course you could, withdraw money from your account, but it should be the last resort. You don't want to pull out money when the market is down. You don't want to pull out money before it's time to retire. And like I said, you're putting your financial future at risk because you can't handle the downturn in the market. So what do you guys think? Have you also been hearing people talking about it's time to liquidate your 401ks, close them out, pull your money out because the market is pulling back? Have you heard people talking about this? Let me know down in the comments and let me know what your thoughts are. Have you thought about liquidating your 401k? Why and why not? Thanks for watching, and I'll catch you on the next video.